What's up, guys? It's June 11th, 2024. Had a uptrend in the markets. We sold off into yesterday's low. Very shot to get the breakout failed, reversed, buy the close rally, breaks through the EMA, and then appears to get the double top, but doesn't lead to a strong trend lower. Like one, pull back like two, pull back like three, wedge bottom. Now we finally get a higher low here. This was an outside bar. Had a deep pullback, so maybe it was a spike, deep pullback, and a channel. Leg one, pullback leg two, and look at leg three. Leg three was so shallow, it just went sideways. I think it was kind of a hard day. I got cut up right here, and then I walked away, and I went long here, had to hit out. I got trapped going short here because I thought this was a full reversal. Then I gave it a bar, gave it a bar. I saw this breaking out by both EMAs, and that's what I got long for leg one, leg two, moving made it back. So not the worst day, but I think it was a hard day because I think this gap down and sell threw people off. It threw me off. I thought this was like a triple top. I thought this was a double top. So higher time frame. Let's do the higher time frame real quick. Pretty bullish, looking good for the bulls. Breakout channel range. That's the entire market cycle. We pull back. We're breaking out from the EMA, and now we're in the channel phase. So we have a leg one trend line break, and now we're going for a leg two. That's pretty high up there. 200 points away. That's a loose. That's actually the depth of the pullback. And this leg starts here or here. Could say it starts here too. That's the entire range though. That's a breakout. Well, I guess we could do it from a breakout perspective. Around 5,700. That's huge. Give me 2 seconds. I'm gonna mute this mic. Okay. So let's do the breakdown. Gap down. Bar one is a good continuation. Bar two, three created. So this is a gap down with follow through. Bar four looks like a strong breakout. Bar five had a rally, ended up closing at lows, became a pullback. Bar six, we break above bar five's high. Not good for the bears, but we are really extended away from the EMA. We haven't tagged it yet. Bar 7, 8, 8, and 9. It's good follow through for the bulls at yesterday's low. So it's kind of a range play. Buy low, sell high. Failed breakout. It's reversing. Reversals are a form of a failed breakout. So the bulls are reversing, and it becomes a buy the close rally into the EMA. I got trapped around here. Opposite bar. It's an opposite bar. So this is a form of a leg two. So leg one, pull back leg two, pull back leg three, pull back leg four. You could say it's an opposite. It's a leg two because of it's an opposite bar, or you could say the trend line never broke until right here. So there's different ways you can play this. If you want to play this, play trend line break, A, B, C, or something. So you buy here and it's back to recent highs. That's actually what creates a double top. Bulls get trapped here. They buy lower. They get out at their original price, and then the market dumps. Same thing for a double bottom. Bears short here. Bears that got short here. They get short here. They hit out here. That creates a higher low. They get out break even +1, and that creates enough buying pressure for the bulls because bears are buying back shorts and bulls are buying back longs. So different ways to see it, but I like to count. I like to just do breakouts and leg counting. So breaking out both the EMA, leg one, pull back leg two, pull back leg three, or we can go leg one, pull back leg two, pull back leg three. Whichever way you see it, it's a vacuum test of the EMA. Creates a double top, bulls get out, and we sell off. This creates a wedge bottom here. Bar 27 is breaking out below the EMA, but it's not a good breakout. Look at the close. I think if you can get short here and scalp, that's a good scalp. Bar 27 looks like it's testing the highs of these bars. So, hold on. Yeah, bar 27 is testing the high here. The market goes more sideways and down. This doesn't look like a strong trend. I think if you're still short here, like maybe you get short here and you get trapped, you definitely got to start thinking about getting out because this was a news bar. It's also like a spike, deep pullback in channel. 3 times the bulls went for the breakout and failed. I think bears saw that and got short. whoever market ordered short here was immediately trapped. They never got their break even exit, so they had to buy back shorts with bar 48. Reversal is a form of a breakout. Bar 49 is follow through. Bar 50 breaking out above the EMA. And now look at bar 51. All the previous times we came to the EMA, we sold off, but bar 51 was the minimum follow through bulls need for a breakout, and they got it. Bar 52, it's not a bull body, but it is a very weak bear bar. 5-minute closing. It's not like reversing, it's closing above the EMAs, you know. The EMAs are crossing bar 40, 53. Did I call this 40? I don't know what I called that bar. Bar 53, breakout. So we're breaking out, deep pullback, first reversal, bulls by the first reversal. That creates a gap here. There's a gap here to here, here. There's a small gap here. So it's not the strongest trend because there's not too many gaps. Yeah, a gap is when this low. So here's a gap. Let me just draw it in so you guys can see what I'm talking about. 54 is low to 52 is high. That's a gap. And then that shows us pull pressure. Then I look at 56. It kind of closed. It kind of penetrated. Let's see here. It's still a little bit open, so it's not the worst gap, but it's not a strong bull trend. Second leg into yesterday's high. Leg 1, pull back leg 2, and the market goes sideways again. Leg 1, pull back leg 2. Look at leg 3 is super weak. Definitely hard to trade leg 3s and leg 4s. It's better to stay at the markets at that point. Market goes sideways into the EMA. And it's a bull, and then bears try and get short again for the reversal down. They want a full plunge. EOD, how many bars are left in the day? They can get that. Ends up being a bull trap. Bulls get the outside bar with 77. It trades lower versus higher, and you can scalp. Well, I'm not gonna scalp. I think it's very dangerous trading around here. Hope you guys are doing good. There was a quick one today. We had a lot of sideways price action. Leg 1, pull back leg 2, pull back leg 3. All leg 3s were getting weaker. Right, so here's a leg 1, pull back leg 2, pull back leg 3, weak leg 3. Leg 1, pull back leg 2, pull back leg 3, weak leg 3. Leg 1, opposite bar. Leg 1, pull back leg 2, pull back leg 3. But then if you trade this higher for a breakout, no continuation. So, and this isn't really a leg 3 because this didn't break any trend line. So leg 1, pull back leg 2, get trapped at highs, and then look at the leg 3 here. Look how deep this pullback was. So bears are stepping up at highs. These are the important things to pay attention to. Drop some comments. Let me know what you guys are up to. I appreciate all the support. Thank you guys. I will talk to you later. Next week we have a day off. That kind of sucks, but it is what it is. Tomorrow's FOMC. If you guys are watching this, be careful. FOMC. I don't know if I'm going to be trading it. I'm on the fence. I'm probably just going to take a scalp and call it. Have a good one, guys. Be safe. Use your stop loss. Have a good night, guys. Thank you. Bye. And good morning. And drink some coffee. And don't drink and drive.